Ladies and gentlemen, welcome back to Real Estate and Finance Podcast with Milton.Andrade and Kimber White, where we try to look forward, predict, and give you answers and clarity on the real estate market and everything that's happening in today. Today is June 17th, 2024. Kimber, thank you for joining us today, as always.
Sure.
You got the answers. So tell me, how is everything going with you?
Good. Uh, People are buying.
Yeah.
Rates have ticked up a little bit, but there's still buyers out there in the market. I think there's still offers. Homes are sitting a little bit longer, but overall, people are still, I think they've adjusted to the rates. We'll talk about that a little bit. There is, as I heard at a conference, there is no white horse savior interest rate coming this year.
So I noticed that rates are at the sevens and in the sixes and in the sevens and in the sixes, and it's swinging back and forth, but effectively it's not moving all that much. Why do rates swing up and down?
Well, the rate, it's just economic indicators. Everyone was holding out hope that the feds were going to actually say, hey, we're going to reduce rates. But all of those are also the economic indicators. When the feds came out and said, hey, we're going to hold steady, we're not going to raise rates, okay, everyone got a little comfortable and they pulled back and said, all right, let's get a little relief on the rates. Then we came out with the jobs market and the economic market, and things are still going, and houses are still selling, and people are buying, and they're using their credit.
Right.
And so the market is not slowing down enough. So the feds, now they're like, okay, well, maybe not. So now the feds have priced in maybe one this year cut.
In September.
That's, yeah, maybe. I would not hold my breath. I mean, we've said that we're going to have, if you remember earlier this year, five Fed cuts was in December of last year.
Yeah.
I would tell everyone, I was just at a conference with some of the top economic leaders. We are in a market. Don't sit out here on the fence and hold off to buy your house because it's not coming down.
Right.
Rates are not going to come down. And if they do, it's an eight. It's not what we think.
Minimal.
And an eighth of a payment on $300,000 mortgage is $30 a month. So So what I'm saying is, but that $30 is going to cost you more because prices are still increasing and they're appraising for more than what the people are selling for. So, maybe one this year, maybe first of the year, end of the year, maybe one more. But we're really looking at the spring of next year. But the market is still going, especially in South Florida.
Yeah, yeah. One thing I've told everyone is that we're kind of in a very odd time, in a very odd situation, because good economic indicators just mean that rates are going to stay where they're at, or they
Yep.
may even go up. And then weak economic indicators would potentially encourage rates to go down. But if we hit a depression or a recession and unemployment ticks up and they bring the rate down, that doesn't really help people, right? Because if you
No,
lost your job, you can't buy a house anyway.
exactly.
And if the economy is doing fantastic, well, you're stuck with these prices because these rates just aren't coming down. So it's a really interesting time to be alive. That being said, the United States economy is carrying the world,
It's leading the
right?
world.
We're leading the world, and it's lonely at the top, but it also means that like the likelihood that we're going to see relief is pretty low. But people are still having babies. They're getting married. They're getting divorced. People are being born. People are passing away. And life continues to happen. So, interest rates almost don't matter, right? It's gonna affect your pocket, but at the end of the day, we're in a housing market that is low on inventory, even though inventory has increased nearly 38% from last year. But we're not above pre 2020 inventory levels, right?
Right.
Which I think before 2020 they were saying, oh, the market's going to crash. It's just
Well, the market's not going to crash. I think people need to understand this. Also, here we have foreclosure waves coming. No, we don't. We
no
don't have
less
foreclosure
than
waves
one
coming.
percent.
Less than 1%. And it's not going to happen. And why is it not going to happen? Because number one, consumers, if they can't afford the mortgage at a 2.625 average rate on a home mortgage right now is about 3.4. That's once you blend all the rates from the 2020 and the pandemic. You're not going to go out there and buy a house. Plus, there's so much equity in your house, you're going to sell it before you foreclose on it, even to this
Yeah.
market. So that's just not going to happen. That's a myth that's out there. All the foreclosures, and you see all these ads, but that's not going to happen.
Yeah.
You also have, and I keep getting mixed up whether it's Gen Z or which one, but they're turning 31, and there's going
Gen
to be
Z.
more Gen Z. They're turning 31. The outside of the boomers, the largest group in turning 31 in the mid 30s, the next few years, that's going to be buying homes. Now, I
Yeah.
was at a restaurant last night, a good example, and this young guy comes up to me and he's 28 and he's talking. I goes, yeah, my lease is up. I'm kind of bummed. I'm going to go and I'm going to leave the state. I'm like, okay, what's your rent now? Well, between me and my roommate, we're paying $4,500 a month. 4,500. I'm like, why? Well, I can't afford to buy.
So
I'm
they
like,
so they a luxury apartment, you
right.
know.
But even a $500,000 mortgage with some of the first home buyer programs that's out there is still about the same right now as that house for rent, because he said my rent's going to go up to
Yeah.
4,800.
Yeah.
So it may not be luxury apartment, but it's definitely
Two at nearly $5,000 a month is definitely a luxury apartment. A $500,000 purchase, you can buy a 2-bedroom, 2-bath condo built in the early 2000 or the mid
right.
early 2010s that are still going to be larger than a lot of these rental apartment buildings, and it's going to be yours. Now, here's the pushback. This is what I get from a lot of people. Yeah, well, I only need first, last, and security when I rent a property, or if I go in an apartment complex, first and security. But if I have to buy a property, I don't have 20% or I don't have 10%. What's your answer to people when they say, well, I don't have the money for the down payment?
Okay. Yes, you do, because there's 3% programs, there's 100% programs. July 1st, Hometown Heroes is coming back. That's the
How much is
grant,
that?
huh?
How much is that
I,
for a regular individual who wants to purchase a property here in South Florida? What is Hometown Heroes going to get them?
I think Hometown Heroes gets them up to $25,000 on Hometown Heroes. I think that's
And
where we're at.
is that considered a second mortgage or is that a grant?
It's a grant,
That's free money.
free money.
So then nobody
Okay.
has an excuse.
And $144,000. But there's also grant money out there right now. There's sellers. Let's just say you've got to put 3% down, but they don't
Yeah.
even have to do that. You can do 1%, 3% down on a $500,000 condo that we just talked about is $15,000. Now Milton right now can use his savviness because sellers are negotiating.
Yeah.
He can get you closing cost credit to help that. Then even without that, you can get them some programs minimum up to $5,750. I just got a buyer coming in with his 3% down payment. That was it on his $600,000 house. And his rent was $6,000 a month. Now,
Yeah.
that's 12 grand, first and last. Now, the thing is, when you buy your house, you're going to skip a month's rent anyway, mortgage payment anyway.
Right.
So you can afford to buy it. I think you don't think you can, but you can afford. There's lots of programs and more coming on the market now than ever, ever.
Well, so a lot of people tell me, well, okay, let's say I'm going to rent a property. Let's look at Brickell, right? I have a 2-bedroom, 2-bath condo in Brickell. I'm going to rent for $5,000 a month. But that property retails for around $700,000. And at $700,000, even if I were to put a 10% down, my mortgage payment is going to be $6,000. Hold on one second, please. So back to what I was saying. There's a 2-bedroom condo in Brickell, rent for $5,000 a month. It retails around $700,000, even with 10% down, $70,000, right? You're
Right.
going to finance $630,000. Well, when you add principal, interest, taxes, insurance, maintenance fees, you are closer to $6,000 a month. What
Right.
do you tell a buyer that is like, why would I buy if my rent is going to be less expensive than my mortgage, and then I don't own it, therefore I don't have to, fix the toilet if it breaks or something like that.
Okay, let's start with number one. Number one, perfect, is that is $60,000 a year. Bye-bye. It's gone. It's finished. It's out of here. It's done. You just paid your landlord's mortgage. Now let's take that same $6,000 a month. So now you say I'm six. So now technically you're out 12,000, but you have a profit of 48,000. Now people's like, why do I have a profit of $48,000? That doesn't make sense. Or 38,000. I said, here's the reason you have your profit of 48,000 at 60. You have your profit because now you're building equity in your house. And in a year, the market right now in the state of Florida is about, and you're the realtor, is running about 5% minimum. And in Miami, it's 6 to 7% annual appreciation. Now, you also get to write interest off of your taxes. What does that mean? I'm not an accountant, but simple math is simple math. Interest on that $6,300 mortgage, let's just say, is $4,000 a month. That's $48,000 of taxable income, 100% tax write-off on your property. Gone. It's off of your base income. If you're in a 15% tax bracket, that's $7,000-$8,000. So there's savings there. You're building equity. So to say you can, do you want to continue renting? Or are you going to build equity? And the biggest wealth builder in the history of the United States is owning your home.
Right. And so you get the discount in the taxes, right? You get to offset the interest that you pay. There's also other deductions that you get from the purchase, and it's yours. And one thing we missed is rates are high right now. But when rates go down, you refinance, you bring that payment back to where it needs to be. Because anybody that has owned a property has always taken advantage of when rates go down to refinance, recast your loan, right? Do what you need to do to bring that payment down. That's why the average interest rate today is 3.4%, right? Another thing people need to think about is 45% of all the houses in the United States are owned free and clear.
Right.
There's no mortgage because people have either been there for longer than 30 years or they paid down their mortgage faster. I think ultimately the message that needs to be drilled down into folks today is you've got to take an active role in your financial life. And that means buying a property, paying that mortgage down, buying a property, getting renters in there, having them pay that mortgage down, refinancing when refinancing makes sense to bring down your payment, to bring down the cost of that capital so that you can gain and appreciate and actually now have something to sell to then buy that second property, because your first home, it's not your last home, right? It's not your dream home, but this is monopoly. And I keep telling people this. This is monopoly. I have a friend who bought and sold and bought and sold and bought and sold and started at one property, and now he's at the property that he absolutely loves on the water, and it's beautiful, and it's everything that he's always wanted. And I, on the other hand, have four, right? I could have the nice house on the water and the this, that, and the other, but I wanted cash flow so I can close my eyes, go to sleep, and make $8,000 a month.
Right. And the thing is, now let's go back to one other option we didn't mention, buy downs.
Yeah.
What is a buy down right now? So let's say you're going to have a $6,000 mortgage. A buy down is what they call temporary. It can be 1-1, it can be 2-1. It's when they buy down, the seller pays it for you, and it's like 2.125 of a loan amount, which means that the sellers are willing to do that. I just had an example of this young couple who literally wanted a house. They've been looking for a house for a year. Of course, no one really was willing to negotiate a little over a year ago. In the past 12 months, 14 months, the sellers willing to negotiate, they're willing to move stuff. And the seller came back in and said, you know what? And the realtor goes, how can we get them in this? I said, 2-1 buy down. You buy the rate down for 2%. We know the rates have to come down. Now, we know you're going to say you've talked about that. No, we've pivoted, we've stabilized. We're going to go down. So I took that rate and I'm an FHA for a house from a 6.625 to a 4.625 on a $650,000 house.
Wow.
I mean, they're now $1,200 a month savings on that 2-1. And then the next year, even if it goes on, now they're in the house. Now we'll refinance them. Now we'll get them to a permanent rate. Now they're happy. And that's how you also do it. You have another couple this week that we actually went under contract, actually last night, talked them into a duplex. I know people are like, again, as Milton said, it's a starter home. It's a
Yeah.
two unit on the water. They could never afforded that house, but they're going FHA, 2 unit, 3.5% down. It's half of their mortgage payment, I mean, their rent
Yeah.
right now.
And they're getting 70% of the income on one of the units, right? To
Yes.
boost their income.
Yep.
Right. So it helps them qualify for more. Like these are like the little tricks. I think it's really important when you work with the right realtor and with the right banker, you think outside the box, you can find these solutions that are going to be the best thing for you in the long run. This is what I'm all about, is like take responsibility for your financial future, because I have a lot of people just tell me like, oh, but it's not fair because interest rates are too high and prices are too high and it's just not fair. I'm sorry. Life ain't fair. Life ain't fair.
Sorry.
And we got to look for what can we do to level the playing field, and that is thinking outside the box, right?
And more and more right now, I think we have to be talking to, and I've seen it the past probably month and a half, self-employed bars. And when people think of self-employed bars, they're thinking of big companies, but that's not true. More and more since the pandemic, we've had Uber drivers, realtors, we've had people with side jobs, they had printing
The
business.
gig economy.
A gig economy, yeah. And we can't afford a house. They say that's not true. We have bank statement incomes. We have DSCR, debt servicing loans. We have other types of loans and properties that you can get into. So you can buy your house, but you have bank statement. You have a lot of we even have a no document 60%, but still, if you want to get into it.
Right.
But we have a lot of programs. I think that right now, more than ever, you got to look at your programs. You got to buy, because I'm just going to tell you, once the rates go down, it's going to be a different economy. Sellers aren't going to be willing to negotiate. Sellers are going to be putting their houses on the market. They're going to be moving. Buyers are going to come back, and people are already. I'm starting to see people that are already like, this is the market. This is what it is. Don't be a fence sitter anymore, because most people I've seen, they said, I wish I'd have bought a year ago. Yeah, I wish I'd bought 6 months ago. Because that same house that they wanted 6 months ago, it's the same price, but the interest rate's higher.
And therefore it's more expensive. It's a more expensive home at that point. Another thing I want people to remember is that these hedge funds are only on the sideline right now. There are billions of dollars waiting in the sideline to scoop up real estate. So the moment that we have more stability in the market, they're going to swoop in and buy up all the affordable real estate. That's what they've done. And people in other markets have really like, no, that's not really happening over here. It's happening in the Southeast. It's happening a lot, right? And there's no legislation that's going to stop these investors from buying up all the real estate. If you look at any other major country, developed country, who owns most of the real estate? It's not the people. So you have to take action, and you got to buy your piece of real estate. You got to buy your piece of property. You got to carve out that piece of the pie, a piece of the American pie, and keep it and make it your own, and then take an active role. But moving on now, how do we afford more home when prices are this high and you don't want to move out of Miami? I think what you said before, a duplex was the right way. The 2-1 buy down was another way
2-1 buy down, duplex. You don't want to move out of Miami, but is there worth also on the other side a temporary geographical relocation to get a property that's cheaper than you can go back and buy your permanent home, but you're still buying equity and appreciation? Is that worth the time for you? That's another thing. But the 2-1 buy down, and I got to put this false thing to bed right now that you can't buy a condo. There's some, oh, they don't buy condos. Condos are horrible. Yeah, they are horrible if you have a crappy realtor. I'm just going to say it. I've got to say it because I have seen more deals because realtors don't know what the hell they're doing and putting the buyer. Unlike Milton and his team, they know, they research in advance. And why do I say that is important? Right now, you are 7 months in this year from where condos have to be fully reserved. They have to have the reserve studies. They have to be assessed. They have to have all their assessments. For those of you who don't know, because of the Sunny Isles debacle that happened in the tragedy. Yeah, Surfside, I'm sorry, Surfside that happened. That's a tragedy. But what's happening? Condos are going on the market. They're going for sale because people can't afford those assessments. They can't afford the increase in condo dues. But what happened? Milton, the prices went down on those condos. Those prices went down. Those people are still going to end up paying those assessments that's been assessed. The condos go, but now you're going to be able to go into one of those condos that's fully assessed, fully reserved and ready. There's a lot of them now, as we talked about the Brickell area down there, at a lower price than really what market value is.
Yeah.
And what's going to happen? It may be lower now, but you're buying that on the lower end of the market, and then it's going to increase because you know what? People still want condos. People want to live in Brickell. Right. You're not going to get a deal.
There is no other option than condos in most of Miami, right? No. A lot of the single family homes are untouchable. Right? Things are going for $1,000 a square foot or more because we just don't have the land. The condos we do, and there will be appreciation in those condos that have seen huge price reductions because of those special assessments and the other construction work that needs to be done in the older condos. And you can get a $700,000 condo for $400 some odd thousand today if you're willing to deal with the assessment and deal with the construction. And then the ones that are in perfect standing, you can get an FHA loan. You may even be able to get a VA loan. You could definitely get a 3% down conventional loan, if not 100% financing in a lot of these condos. Because now a majority of them are having the full reserve and are able to get this financing in place. I think what we really need is a kind of a reset in the expectations of what people think they can get, because the landscape has changed and we're no longer in 2019. A lot of people, they come up to me and they're like, well, I'm looking for a newer 2-bedroom, 2-bath around $500,000 in the heart of Brickell. And I go, that's 2017.
It was 2017.
Right? That was 2017. That's no longer there, right? Now it's 20% more, but inflation is real. These things really happen. We're not going to deflate, unfortunately. Right?
Yeah, we're not deflating.
It is going to be, and so rent is more expensive. If anything, let that be a lesson that had you owned something, you would have appreciated while currency depreciated, right? Yep. When everything inflated the way it is, you would have also inflated your wealth. And that's why I have some friends right now who are like kicking themselves in the butt because like, oh, you know what? I should have bought a house instead of a condo. And I'm like, well, you still made $250,000 in your condo in 3 years, right? Right. But if they bought a house, it would have potentially doubled. And I'm like, well, then let's buy the house now, because you can sell that property, then you can buy the house. Or if you're open-minded, you can move from Miami-Dade to Broward County, and your money goes 30% further. That's just the truth, right? And so what would normally cost $1 million here is going to be $700,000 in Fort Lauderdale. Yeah. That is something to consider. Well, but I work in Miami. Great. You can still work in Miami. We have the Bright Line. People have to get a little bit, you got to open your mind. But if you only want to live in Miami, if you only want to live in Brickell, and you only want to be in these areas, and this is what it costs.
Exactly. I agree.
I wish I could cast a spell, but it's not going to change. But, if you look just outside of Brickell, you have historic Coral Way, you've got a Little Havana, you've got Edgewater. There's other areas where you can get a little bit more, right? Instead of having the direct water view, you'll have a city view, which I kind of like more. So that's just the perception. And more than anything is, why do we have to change our perception? It's because the game has shifted, right? It's no longer, back in the day it was go to school, get a good job, blah, blah, blah.
Right.
You're good forever. That ended a while ago. And then it was, well, all right, just get a good job, work hard, make some money, and you'll be okay. That's over. You got to try to be a millionaire just to be a thousandaire. You got to be an entrepreneur. You got to think outside the box, whether you like it or not. It's time to grow. It's time to flex. You want to live in one of the most beautiful cities in the world with amazing weather, even though it does rain a lot sometimes, right? You want to live where most people dream. Well, this is what we have. And this is, we just have to think outside the box and buy that investment property in Jacksonville so that you can rent the condo here. It's like take a active role. And you have great loans for investment
Yeah,
properties,
we do.
non-QM loans, those DSCR loans, those bank statement loans. You can really. There's so many different ways to find that solution of what's right for you. When people tell
And
me, well, I don't want to be a landlord, great, don't be a landlord. You also don't get to collect rent on the first though. You
right.
know?
And I think one of the things that we've got to, when we say that is, you know, I was at a conference and we just heard Nick Saban speak, and it's so appropriate to a real estate market. And he said that what really got him when he was early days of getting into winning is because they would tell him he felt. And he goes, an old coach said to him, winners choose, losers fill. So you got to choose now because I
Yeah.
don't feel right. I don't feel that the rent's right. I don't feel that the market's right. I don't feel good about the interest rates. I just don't feel good about living outside of a concierge doorman, $5,000 apartment. I don't feel that this is the time. You got to choose. Choices is what makes you successful in real estate and it makes you successful in life. And I say that I didn't choose early on. I chose to rent, 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 rent. And I look back and say, damn, if I'd stopped renting and bought. And I was in the industry. I got 38 years in this business.
Yeah.
But I was like the cobbler, like, let's make shoes for everybody else and not make shoes for my own family. And it's the same thing with buying houses. And
Yeah.
now is the time to choose because the choices you make are going to get you equity in your houses. And to look into it, it doesn't cost, if you're up for looking to rent or you're looking to move or you're looking to buy an investment, it doesn't cost you anything to contact me, contact you, to be qualified, to see what's out there, to get to pre-qualification, to even say, hey, I'm going to rent. And let's do comparisons. I've gotten charts. I've got everything I can sit down with, and it doesn't cost you anything.
Right. It's just to get informed, right? That's why
Right.
I'm going to have a buyer seminar coming up in July because I just want people to know how this process works so it's not intimidating,
Yep.
right? Because buying a property is typically the largest investment most people make in their life, and a lot of that is just fear behind it. I don't even want to know. I'm just too busy living my own life or planning my next trip. I
Yep.
don't, it's not something I want to do right now. But I'm like, but if you know the process of how it works, it's going to be so much smoother when you want to really make that decision and make that jump. That's the most important. It's just get
Yes.
educated, get educated, get educated, because this is for everybody, right? I do believe that home ownership is important. I believe that it is the foundation of the American dream. People come to this country from all over the world because they come here to work, they come here to build their life. And I've sold more homes to people who moved here 5 years ago. Like, matter of fact, we just recently had a closing. This individual moved here from China, not China, India, got a job here in IT and saved up all of his money and within a year bought his first property. How many people who are born and raised in this country and don't own real estate because they
Yep.
didn't sacrifice? You got to sacrifice, right? Make your lunch at home. Don't eat out. I know people say don't get that coffee, blah, blah, blah. But it's like, what can you do to sacrifice now so that you can have that down payment or get the credit in the position for the stars to align to be able to get out there and do it? Because the stars don't always align. Life is ups and downs. So when the stars have aligned, take advantage. Take
Right.
advantage and do it. Because I have a client that I had been speaking to since 2019 to buy a property. And in 2019, she wasn't ready. And then in 2020, she wasn't sure. And then in 2021, I don't know. And then in 2022, things are moving so fast, I'm going to wait for it to settle down. And in 2023, I'm about ready to do it. And then in 2024, I was ready to do it. We got into a contract and her job situation changed. Now she may have to move
Ouch.
to Florida.
Yeah.
Had she purchased that property back in 2019, she would have been a couple $100,000 richer and had more rights to stay in her home as an owner than as a renter. So it's
Yep.
like when the stars align, take action.
I agree.
Call me and call Kimber. Let's have that
Well, take care.
conversation. Let's get educated and let's try to find out if buying a home is the right thing for you. When you're ready, it's the right thing to do.
I
Right?
agree. I agree.
Any closing thoughts?
No, I just think now is the time more than ever. I'm seeing the market turning more and the sellers and buyers actually working together. But I have started to see more buyers picking up, looking to buy because the market, people realize this is the rate, it is what it is. And historically, let everyone know the high sixes are historical average. You're not going to get twos, you're not going to get threes, you're not going to get fours unless you have a very sick economy again. You may get the fives, but that's not this year. That white horse isn't coming. Everyone needs to
Right.
know it's not happening. But there's good deals right now. That's the thing. Next year, this time, we'll be talking. I bet you we're going to sit there and go, wish you when the seller was willing to negotiate, because sellers aren't willing to negotiate now.
Yeah, sellers are definitely willing to negotiate right now, and I think now is the time to really take advantage of that. Get your rate buy down, get your closing costs paid for, get a better price
Yep.
on the property. I say now is the time to do that. When everybody else is scared, you got to double down and take advantage because when everybody is ready and out there, prices go up, competition goes up, and now you're not going to get the deal. Get the
Yep.
deal. Fall in love with the deal. All right, Kimber. Well,
All right.
thanks so much for joining us today. And I'll see you in 2 weeks for this recurring podcast.
All
Thanks
right.
so much, everybody. Take
See you
care.
then. Thanks. Bye.